Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new-age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new-age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new-age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new-age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. Journey. Infosoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infosoft Tech and excel in your digital transformation journey. Infosoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard.
Banking has rapidly evolved. From the traditional banking days, Today, it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new-age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new-age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination of innovative solutions and new age technologies like artificial intelligence, machine learning, IoT, robotics are poised to transform the customer's banking journey. In such an environment, how do banks remain competitive and navigate through the complexities of digital transformation? Join hands with Infrasoft Tech and excel in your digital transformation journey. Infrasoft Tech's continuous innovation hub, focused on creating highly adaptive digital solutions, helps you keep up with your customers' expectations by driving seamlessly through your digital transformation curve and offer them a consistent banking experience.
She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard.
Banking has rapidly evolved. From the traditional banking days, today it's become truly branchless. The customer-centric approach has led to customers interacting more using an omni-channel way, accessing a wide range of banking products. They rely on fully automated systems for instantaneous decision-making. A combination.
Hello everyone, welcome to another day of the Business Standard BFSI Insight Summit. 4 sessions, 4 keynote speeches, 23 speakers from the best of the best in BFSI, and 40,000 views later, we are halfway in the event series now. And today, we have an inside out discussion on Fintech and Banking Technology lined up with a keynote speech by Mr. Aditya Puri and this eminent panel. We will take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website. For social media conversations, use the hashtag BS_BFSI. May I now request Mr. Tamal Bandyopadhyay, our consulting editor, to start the session.
Hello and welcome to day 5 of Business Standards Mega BFSI Summit 9-day 11th event series. Today it's probably the most exciting one on banking technology. We need banks, but do we need bankers? We have a panel discussion later. And before that, yes, Mr. Aditya Puri is with us to give us the keynote address to set the context. Mr. Puri doesn't need any introduction. He is the longest serving bank CEO in India and probably anywhere in the world, or maybe, yeah, he competes with Jamie Dimon of JP Morgan. So I would like to say that maybe he is one of the 2 longest serving bank CEOs of such a large size. So Mr. Puri, over to you.
Thank you, Tamal. Good evening, everybody. I have been, as Tamal said, asked to speak on when banks will become fintech companies. I'm taking the liberty to expand the topic to the changing world and its effect on commerce and, in particular, finance. Also, I will try and put it in a wider perspective because we seem to discuss the topic piecemeal and then everybody has his own opinion and own definitions of what is digital and who will get eliminated, etc. So, as we all know, the world had been changing, but COVID has turned the world on its head and the turbocharged the change. We are seeing changing geoeconomics and politics. Democracy and global trade have failed to address the issues of humanity relating to reduction of disparity, creation of jobs, and elimination of poverty, resulting in a very strident political discourse to address human concerns. China is challenging the US as a superpower, leading to more political and economic blocs. China's position as a supplier to the world is in trouble. Climate change has moved from the drawing rooms to center stage. At 1.5%, global warming over the last decade has resulted in more severe storms, typhoons, droughts, fires, etc., you name it, and health disasters. The consequent human hardships are global, but the people at the bottom of the pyramid have been hit more. A realization that governments cannot do everything is leading to a change in corporate and individual behavior. Corporates move from stockholder focus to stakeholder focus. Individuals will need to give back more to society. Now we come to what interests Tamal. The digital revolution caused by a secular shift in telecom, computing, social mobility, robotics, AI is changing the way we work and play. A combination of these changes will require a complete transformation of society, government, and most businesses, not just finance. The future of various businesses will create opportunities and risks, and I therefore felt the subject was too restrictive and we needed to expand it a lot. On a more micro basis, I would like to cover the positioning of India in this new society, because that's what's relevant to us, and I think it's great. And as a subset, Fintech in India. The digital infrastructure for public good, UPI, Aadhaar, eKYC, and other elements of the India stack, coupled with broadband penetration and cost of telecom, high usage of the net and mobile, drop in the cost of access devices, as my friend Mukesh comes out with a 5,000 or 7,000 rupee smartphone, will democratize, this is very important, will democratize benefits of technology, which have been at the moment restricted to the upper classes, and will allow India to pole vault over other competitive countries. Infra spread, coupled with agri reforms with easy availability of credit, which I think is the joint responsibility of banks and regulators with a forward-looking approach, should transform semi-urban and rural India, where 60% of the population lives, creating a middle class of approximately 200 million people. China plus one, and with the correct response of PLI by India, will create manufacturing jobs. Digitization of tax collection and identity has already caused tax to jump, both GST as well as income tax. Monetization of government assets will allow to spend on healthcare and education, and this coupled with use of tech for creating good, affordable housing easily available will transform society. My friend Ruchit Sharma and a lot of guys, including Tamal, who said, no, the government of India underspent on stimulating the economy. Now all of you read Mr. Sharma's article in Times of India, says we were prudent and that excessive stimulus didn't work. So we still have our powder dry, and I think we should compliment, and I'd like to take this opportunity to congratulate also Governor Shaktikanta Das that we had a very focused approach. Now come to the youth between the banks and the tech-based businesses. The purpose of this discourse was to emphasize that change is a must, and there is a big cake for the market leaders. So what has caused the change and a blurring of competition? As I said earlier, the secular shift in tech, telecom, social mobility, connectivity, leading to availability of data, artificial intelligence, robotics, allowed companies and industries to change their business model. That's what fintech is. To focus on customer need, frictionless service, and operations leading to lower costs. Most did this not by revolutionizing tech, but by using it. So Amazon, Facebook, Google, Netflix reacted in, and companies that did not change, like Kodak, Nokia, HMV, Border, disappeared. Companies used what is called OTT, over-the-top applications, which all the fintech fellows do, uh, that sat on top of traditional bank networks, customer base, and merchant relationships. They were doing this by using application programming interfaces. A similar phenomenon had happened in the telecom sector, where the OTT applications like WhatsApp had sat on top of the telecom network, taken away the messaging business. Now everyone says banks are special, so says everyone. Can and should other businesses ride on bank systems, leading to huge cost to the banks without adequate returns and proper discussions? In a race to own the customer, should banks be allowed to run marketplaces so that they can also get ownership of the customer? When do guys cross the line and become financial companies and then subject to the great financial regulation that we have? When does the Competition Commission look at pricing? When does the public good costs like PSL, etc., get applicable to companies who want to become tech companies, who want to become fin also? The issue is fundamentally very simple. Who will own the customer and who will be the service provider? The person who will own the customer is the guy that the customer goes to first. Both tech companies and banks have strengths and will fight to achieve this objective. Banks have brand, trust, money, customers, and a broad product range. They're weak in frictionless customer service, cost, geography, scale of acquisition, and data, and they're limited by regulation. Fintech companies, on the other hand, have scalable tech, frictionless service, low cost, and are building a large customer base and have flexibility, but have a weak, limited product range. At the moment, they've only been spending and acquiring the customers, most of them, and have been monetizing it through advertising. Can they exceed the product range? I think we need to discuss that. Banks need a complete transformation using the secular shift in tech, telecom, computing, social mobility, etc. The purpose being speedy, frictionless interface to improve customer service, better credit and risk management at scale, eliminating boundaries or geography, also apply AI to massive amounts of data, which the banks have the best. I can recreate a human being. I know where he shops, I know where he plays golf, I know which club he goes to, I know where he earns, I know his electricity bill, I know what he buys for his girlfriend, I know what he buys for his wife. So I think that's the best data available, and this can be used for prediction and decision making across the entire organization. Banks have made progress. They've used API to provide payment services, and providing to Google Pay, etc. The volumes are huge, requiring a shift to cloud. Otherwise, the banks will not be able to manage it, because at current, if they use current systems, the amount of investment required in putting the data capacity and computing capacity is just too high with straight-through processing. And so they will need it as cloud. They will keep it as a business. But this is not where the banks make a major amount of money. So we need to understand, when I come to fintech, where exactly, whether the fintechs are in a different market, whether the fintechs are going to be in partnership, etc. Banks have also started substituting, and obviously different banks are at different stages. Whatever can be done through automation need not be done by human beings. And the use of chatbots, commerce bots, humanoid robots for routine interaction. Some banks, and this is very important, move from internal systems of record to platforms so that any application user could get access to a common set of capabilities through APIs. This would allow quick launch of products across a large geography. Loan in 10 seconds. I don't know how many people can do this. What this does is it's paperless, presenceless, cashless, using the bank's strengths in underwriting, risk management, history with AI, reaching wider geography, low cost, improve productivity and customer service. They've also reduced drastically the turnaround time for SMEs and shops, which is, these are the people that don't get credit currently, and it is a must. that both the banks, the regulator, as well as everybody who's in financing goes through this, because that's where we need it. Drastically reduce turnaround time to SME shops through use of AIs, internal and external data, and increasing geographic coverage. Use of marketplace platforms, and this is something that people need to understand. For instance, DBS is using that to create and convey a universe that the customer will deal in. Use of marketplace platforms covering shopping, travel, auto, healthcare, etc. to provide in partnership, not by the bank, to provide in partnership through the use of technology and platform creation to the customer, a one-stop shop for all his needs. This is a must. If the other companies can ride on tech, so can banks, and they must be allowed. The bank functions as an aggregator hosting links to various sites catering to diverse customer needs. And what this allows them to do is offer a wide range of products, bundle the offer on the product and the financing, no multiple site visits for the customer, purchase online, and compare prices as well as the most secure form of payment. The banks have also, most of them, replaced digital regular POS with digital POS, combining card payments with new payment systems like UPI and QR codes. This allowed banks also to access new markets like schools, colleges, hospitals, societies, etc. They've also gone in for host-to-host integration to avoid paper and straight-through processing and thereby reduce their operation. Cloud, again, one needs to look at it very carefully. You just can't move to cloud. Cloud has unidimensional processing. But what it allows you is to exploit for speed, agility, and scale. And some people have expressed concerns on the security of the cloud, the private cloud, and if we encrypt it, gives you as much security as any data center that you would use. But it needs digitization. The role of branches. Traditional branches may reduce, but there are people who love the branches, who are not bankers and of my age. They like to go to the branch. There are regulatory constraints. Still, you can eliminate documents, etc., and use paper, and you can eliminate the use of wet signature. But the bank should, if the banks are properly digitized, the branches will become smaller, sales and service, and for high-value products. A lot of the banks who've done all this would also have a digital bank within the bank. Full range of services offered digitally, deliver value propositions through customer experience, which is intelligent, i.e. anticipating and automating key tasks and recommendations, personalized offers, which are relevant, timely, and based on detailed understanding of the customer. And an omni-channel, this is the other part that's important, channel, delivery system, including partner of ecosystems. Basically, digital processes coupled with AI-based targeting of customers at all touch points. Search optimization, management of the properties, and digital CRM, including campaign management. Robo-advisory is something that banks and Fintech can look at. Ecosystem-based engagement for purchasing decisions as spread as travel, entertainment, having healthcare, and consumers are becoming accustomed to the convenience of planning and executing vertically linked transactions with a single ecosystem. Virtual customer management. If we have digitized, then at all touch points for the customer, we should be, the bank staff should be able to deliver to the bank to them based on a 360-degree view which the back-end analysis would provide. Fundamentally, we also need to look at core technology. Delivering superior experience that the customer expects requires seamless integration across diverse bank and non-bank systems, the capacity to manage data sets from various sources, and deployment of artificial intelligence and advanced analytics to extract actionable insights and deliver personalized product delivery in a fraction of a second. The old systems are not agile and rapidly scalable and costly. Main components, intelligent cloud, data management, API, this is important. Seamless customer journeys across internal platforms, partner ecosystems, and numerous external interfaces. Well, now this is the new bank. Welcome. Now let us come to, and in this situation, again, it's very important that the banks and the regulator work together, because the window for seizing the opportunities is limited, and banks play a very important role in the development of the economy. Let's come to fintech now. A lot of talk, a lot of progress, but let us bring it down to brass tacks so that we don't keep talking about who's going to get eliminated, who's going to do what, etc. So mainly they have been in a few areas, payments and wallets. Here they achieved scale, but profit eluded, including somebody like Paytm, till they partnered with banks to expand their product range. Good idea. They're niches. They're doing more of the small ticket items. And now when they need to earn money, they need to partner with a bank. Nothing wrong with it. Merchant payments, POS and payment gateways. People like, a lot of their companies have come in who are offering very good services at the merchant, but they also need to be in partnership with the bank. Good product can be developed in partnership for anybody's benefit. Everybody, not anybody. Digital lending and open banking, growing rapidly. Here again, we need to see what will happen. A segment of small ticket items probably would go to fintech. When you want to go to larger items, you need collaboration. And if you get too ambitious without having the knowledge, then you know what has happened to the NPAs during the COVID period. Again, you need collaboration, and banks are going nowhere, man. Banks is, it's the second oldest profession after prostitution. So they've been there for a very long time, my friend, and they'll be for a very long time further. And if you look at what I said in terms of somebody has to finance the climate change changes, somebody has to finance the changes brought about by digitalization, somebody has to finance infrastructure, somebody has to do the large fund transfer, because people don't trust people other than banks for fund transfer. That does not mean they don't have to change. But don't make the mistake like my friend Nandan Delikity of writing off the banks. The good banks will do well. And do not overestimate what fintech can do. Both need each other. I'll come back to that. So then insurance tech. Yes, insurance aggregation is working. But so is models of sales, insurance companies with the banks. And that's the most important. The insurance company is doing well, have arrangements with good banks. So yes, that can grow. Brokerage is another good one where a lot of brokerages have got it, but so are banks brokerages flourishing. So there's space for everybody. Wealth tech is scale and profit. Mainly what has happened is digital platforms and partnerships are driving 50 to 75% of bank businesses, where the two, fintech and the banks, are working together in lending, liability, sourcing, insurance, investment, etc. Now let me come to the conclusion. Change is there, customer is king, but the person to meet customer needs the best wins. Regulatory stance is key so that we can maintain the benefit of what I talked about, our stack, etc., to be some of the best and leapfrog over everybody else in providing services. As far as fintech and banks are concerned, each will have niche markets and each will have partnerships. So I think we're in a great world. Collaboration always win. Teamwork always win. As Tamal will tell you, center forward is not good enough. You need the whole team. And the fun and game will start when open banking comes in, because then a lot more data will be available. The winner is who knows how to use the data and has the experience and moves the fastest. So let me wish you all a great time. Have a ball. I am no longer in a worker class, so I shall watch it from the outside and criticize you liberally through Tamal. Take care, remain safe.
Thank you. Thank you, Mr. Puri. I don't think we could have a better keynote speech. So taking this much beyond the scope of the discussion, much larger macro picture. And so one word he repeatedly emphasizes: collaboration and partnership. So let's not get excited. That's what he's saying, that bankers will die or banks will die. I mean, both of them, both the sets that tech, fintechs and banks, they are relevant, and they will remain relevant as long as they hold hand and they move together. That's the key. So get back to our second phase, the panel discussion. Let me introduce the panelists to our audience. Welcome to this panel. Very good evening, good afternoon, good morning, depending on from which geography you are joining us. Rahul Chari of PhonePe. I mean, those who watch TV, they doesn't need any introduction. Every 5 minutes, PhonePe comes and very nice, interesting, funny ads. Rahul Gupta of Avanti Finance. Those who don't know Avanti Finance, probably most of you know. It's sort of technology-led NBFC focused on financial inclusion, the bottom of the pyramid. It's a Ratan Tata, Nandan Nilekani joint venture. Rahul had a long stint in G Money and then, of course, Citibank before that. And I think another gentleman who is well known from this entity called Lalitesh Katragadda, he's the Google Map man. He created the Google Map across the world. So I think he helps the technology part. Then Rajesh Manjareka, Rajesh is Infrasoft. It's a leading fintech digital solution provider, both for banks and non-banks. Ramesh Lakshminarayan, the new man, is a group head IT in HDFC Bank. I think before that he was with CRISIL, and before that he was the director and founding partner of Pragmatic Services Private Limited. It's an analytics and that kind of startup in this fintech space. Then we have Sajid of Google Pay and Vikash Bansal of Amazon Pay. Again, I'm not explaining who are you because everybody knows you. So what's the topic? We need banks, but do we need bankers? Actually, it was picked up from a 1994 Bill Gates quote, where he said that banking is necessary, but bankers are not. And now it's 27, 26 year old. I think people are criticizing either way. They said, no, I mean, banking is necessary, bankers are not. It's not correct. I mean, bankers are, one school says no, banking is necessary, bankers are also necessary. So you have got it wrong, Mr. Gates. After 27, 26 years, still bankers are there very much. And other parts is that, why are you talking about bankers or even banks? Both of them will become irrelevant. The fintech will take over. So that's the reality, or that's the discussion, that's the controversy now. And I'll just make one more minute. About 2 years back, I heard Mr. Aditya Puri with equal emphasis, vim and vigor. He said, you get a Michelin cook and get him a fantastic kitchen with all kind of implements, technology, etc., very modern kitchen, and ask him to make chicken curry. Will he be able to make it? No, because he does not have the chicken. As long as he does not have the chicken, however best technically equipped kitchen you have, however great cook you are, you can't make it. And then he said that bankers have the chicken, meaning the customers. So how can you take the customers away? That's the bankers' strength. So as long as bankers are smart, banks are smart, and they don't allow you to overtake them, they just collaborate with you, you can't beat the bankers. But it looks like that the Amazon and Google Pay and all, they also have their chickens. Yeah, so I guess if you're a good cook, you can manage the chicken and cook a nice chicken curry if you're a Michelin cook. So that's my introductory remark. I think all of you can speak about 3 minutes. How do you react to this subject? And then we'll get into a smaller pieces of it. And we will continue till about 6 o'clock. And after that, there are questions already started questions coming up. So we'll take a few of the things. So we'll go alphabetically. Let's start with who comes here. The two Rahul Chari, PhonePe. You are on mute, Rahul.
Sorry. Hi, Tamal. Thank you for having me here. It was really great to hear Mr. Puri. So the question is, we need banks, do we need bankers? Let me start with, I think, a big plus to what Mr. Puri said. I've said this before also, I think the word fintech really is bringing finance, which the bank really brings, and the tech, which players like us bring, and it's a collaboration going forward. I think what we are going to see, I think classifying the tech players as fintech and then banks is really a misnomer or a siloed myopic view to it. I think a collaborative view between the banks and the banking, which is an age-old profession, and bringing technology to it is the future. And both these entities, players, or actors in a concerted manner is what is going to change the landscape. Now, coming to bankers themselves, I think the larger question is that is technology going to upend a lot of professionals and professions going forward? Why are we just talking about bankers per se? I mean, if we talk about AI and we're talking about technology and we're talking about the use of large scale data, there are a lot of professions which, unless they evolve, are not necessarily going to stay the way they are, right? And evolution is going to be through understanding, adoption, and utilization of technology. So I think the question is much bigger than bankers. The question is about professions and professionals as we've known before are not going to be able to act and do what they have been doing and just continue to exist or be relevant going forward. Adoption of technology, appreciation for technology, and utilization of technology in any profession is going to be the way forward. That works for bankers, that works for CAs, that works for lawyers, and every profession. So my answer really is that banks as well as bankers are going to be there. How they operate, how they adopt and embrace technology is going to say who are the ones who are going to survive and who are the ones who are not going to survive. So I think that's really my 2 cents.
Thanks, Rahul. We'll get into the micro issues later. Let's go to other Rahul Gupta of the finance. Over to you, Rahul.
Thank you, Tamal, for inviting me, and good evening to the rest of the panelists and those who joined this session today. Just one minor correction, Tamal. Prior to G, I worked with American Express, not with Citibank.
Okay.
A lot of respect for Citibank, but I wasn't there.
Okay.
Just to clear
Sure.
that.
Okay.
So, I mean, in my mind, there is absolutely no question that we need banks and bankers. And I think the word ecosystem today, which might have sounded a bit cliched a few years ago, I think is no longer cliched now. So when if we're talking about, frictionless, reducing friction to the end borrower, or empowering people at the bottom of the pyramid, or giving better options to people in the choice of financial products and the delivery of it, I think it's that whole ecosystem and collaboration today is absolutely ripe. So banks plus fintech, payment gateways in between, I think open platforms, Mr. Puri had spoken about, platforms for social good. I think all of this coming together is what will make the real sort of game-changing moves that we want to see in the industry, which benefit the end user. I feel what the technology will do, and Rahul raised a very good point, why isolate just financial services or banks here? When you look at AI or robotics or the next gen telecom, 5G, etc. I mean, what's going to come down the pipe is going to affect a lot of professions, and how people pivot and, morph themselves with new skills is going to be the sort of change that we have to look at. So yeah, just to reiterate, I think everybody is going to coexist. It's how we draw upon the best of each other. And especially in a country like India, where there is still a reasonable amount of digital divide, it's not that fintech is going to solve for everything.
Thanks, Rahul. So let's Rajesh. Rajesh is actually he is equidistant from both the banks and fintechs, and he makes money either way because he provides digital solution. So let's hear Rajesh now.
Yeah, in my view, I think there is a clear need for both banks and bankers. If we look at the stage play today in terms of how finance works, let's look at the evolution of how technology adoption has moved. We've seen the large banks and private banks adopt technology. Then you had the cooperative banks adopt technology. Then you had the public sector banks anyways adopting it, but getting into the digital aspect. But slowly and steadily, we've also seen now with the government policies, the primary agricultural credit societies also getting technology and adoption, looking at that plan. Now, when you look at this technology adoption, you'd also find the next bit, which is the regulatory and regulations that are coming next to get them to be operating in the right manner. So when we look at this change, I think pretty much if you look at the banking ecosystem of how it has existed, whether in the form of banks, cooperative societies, etc., that will continue to exist. I have been in the industry for a good 25 years plus and have seen banks uh, just growing year on year, while there are various trends that have seemingly written obituaries about various system actors, like either banks going down or somebody says cooperatives will go down or things like that. But I think in the current ecosystem, and I get inspired by what Mr. Puri says in most places where he talks, is to say that there is so much out there to really sell that everyone will make money. So when we look at the banking system per se, I don't think it will be threatened by fintech. It's in fact going to be enabled by fintech players. And fintech as a word will evolve together with banks and non-banking players. The other trend I do see is the fact that it is horses for courses. The thing is that you have to solve some of the customers' problems, and that is where you build a business case. Now, whether you have a bank doing that or whether you have a fintech firm or tech firm doing that, it depends, or whether it's a technology firm like ours. You have to solve a problem. And I think there are enough problems in the way financial inclusion has to be addressed where there is enough for everyone to do. So that's why I feel that banks and bankers will continue to coexist. There is this whole talk about artificial intelligence taking away manpower from the ecosystem. I don't think that is, we are looking at that age in the next decade to come, because AI as a system is yet to mature in terms of what it can deliver. And next point is you will then have AI being regulated to say how long and what boundaries do you need to put for AI. So I think it's a good decade by the time it takes charge to be able to run processes through and through without the intervention of a banker. So from that perspective, I think there is enough for people to do, and banks and bankers together will continue to build up the whole world of financial inclusion.
Thanks, Rajesh. So let's get into, let's now ask the only banker on our panel. We have done it deliberately, because banker's voice is always heard. So let's hear others. But now here, Ramesh, the tech boss from HDFC Bank. Over to you, Ramesh.
So, Tamal, it's interesting because, frankly, if you see my background, it's been an interesting one, right? I was a banker for very long and then went and did a startup and then came back to the bank. So I'm not branded or labeled as a banker out here, and that's also been an eye-opener. When you go and set up a fintech company, and you look at pieces around technology, pieces around cloud, microservices, API, beautifully done. I mean, you learn from the big techs, you learn from the open source markets. Pretty much, it's worked well. But each of those fintechs could today go and talk about saying what is missing the domain strength. You can put a RN and CNN, you can put all kinds of models, but if the guy doesn't understand the basic domain of finance, you can't create magic out of it. So fundamentally, fintechs would need domain specialists. They would need bankers. I have a slightly contrary view. Even for them to grow, they need bankers to shift. The same problem on the banking side. When you come to the bankers, largely, and it's not a lot of banks, it's foreign banks, private banks, a lot of them have invested in technology, and they've been doing through over cycles. So it's nothing new for the banks right now. It is just that the kind of technology that started opening up and the pace at which the banks have adopted, I think that's where I think most of the challenges have come in. And some of the banks are reacting very fast on that front. So if you see today, a lot of banks are moving very, very rapidly in that direction. Of course, it's not going to be an easy journey. But what I also see, the other point linked to that. So one is about just the fact that the new world will be driven by not so much by bankers and techies. I think it will be largely driven by new age skills and how the new age skills get distributed into these ecosystems, and that balance of the distribution would determine who's kind of going to kind of lead the journey. So clearly, the way I see the bankers themselves will change. So today, a credit CRO in the bank has to understand some of the model methodologies, how they would work. A sales officer has to understand a clear cross-sell model and what are the variables going on that. So it's not going to be kind of a classical banker. So what I see is that what we would see is an evolution of skills on both sides. I see the fintech companies aspiring to pick up banking skills and deep domain banking expertise. On the other hand, I also see bankers wanting to take new age skills and pick that up. And then the ones that can create this quickly and create magic are the ones that are going to kind of in that sense lead the race. It doesn't mean one versus the other, like beautifully put by by Mr. Puri, and then people later on also spoke about it. I think the game is going to be more played on the skills, actually, if you ask me.
Thank you. Thanks, Ramesh. I think I made a mistake. Instead of requesting Mr. Puri to give the keynote address, we should have asked him to give the validatory address, because so overwhelming, you are all overwhelmed by his thought process. And till now, all the four speakers are in sync with what he's saying. So let's hear the two international players now, if they have a little different point of view. Otherwise, very one-sided. He has set the ball rolling, and all of you are going well. Mr. Puri has said that. I mean, I can imagine in Indian banking and technology, he has the last word. So all of you are eating out of his hand, literally. So yeah, let's hear Sajid of Google Pay.
I would thank Tamal for having me. Much appreciated. Tamal, I would say though that it's not just the two of us who are the international branch. Pretty much everybody on the call here has very deep international ties. Just to be very clear, it isn't just Amazon and Google Pay. And despite of course Mr. Puri's remarkable eloquence and persuasion that we are all sort of aware of, in my mind, as somebody who is, by the way, an HDFC bank account holder, a shareholder as well, I mean, I've always felt banks are needed, and bankers are part of that, right? But without sort of just continuing to agree, I think let me extend this a little bit more by saying that, what we really need banks and bankers to do is to actually increase their appetite, right? I mean, to sort of further the analogy of the kitchen and the chef and all of that. See, the only way economies grow, that differences can be made in the lives of people, and that generally, countries, etc., grow is if credit is made available. The world works on making, credit available. And if credit is made available to more people, more business happens, more commerce happens. And, I think the one thing that I would say we probably need our banks and bankers to do is to actually partner more deeply with platforms such as, ourselves, in order to be able to marry the data and the signals that we can bring, and some of which Mr. Puri touched upon, some in rather colorful terms, in terms of all the signals that he has and who buys what for whom. And of course, there's a bunch of other signals that are more serious. But just marry those signals that fintechs have with the balance sheet that banks have and the license that banks have, which need to be respected. But to find a way, because I think what generally tends to happen in India is that a majority of the loans are made to a majority of people who don't need these loans, right? And yet they take it. And if we have to really truly build a sense of inclusion in terms of financial growth and economic growth, we've got to find a way in which these two things are thoughtfully married, respecting user privacy, data privacy, but find a way for these two to sort of come together in a way like never before, and serve a much wider user base, with some element of risk, of course, but certainly not one that would break the bank, so to speak. So I think what is really needed, banks and bankers are absolutely needed, but what do we need more of? We need more sort of partnerships that are deeper, that combine signals, that combine balance sheets, and actually make a lot more available to a lot more people in order for economies and countries to grow.
Okay. Thanks, Sajid. So last speaker, you have the last word. Vikas, over to you from Amazon
Thank
Pay.
you.
Yep.
Thank you, Tamal. Yeah, first I wanted to say thank you for the opportunity. And I am so honored to be part of this esteemed panel. One thing just wanted to clarify that as Amazon Pay, though Amazon is a global brand, Amazon Pay was very much formed in India, for India,
Yes.
and run by India. So, we are all on a mission to really transform customer experience and simplify, customer lives. In terms of when I think about, uh, the next few years or next decades, what's important, right? What's we are seeing is that the technology has offered us an enormous potential, right, and opportunities in the banking sector. And we are already seeing the impact of technology, right, on how India is going through massive transformation as we speak, whether that is in payments and now extending to microcredit and lending, to insurance, to wealth, and just it continues, right? The list continues. And what's important, right, as we think about all of this transformation is that what has caused this is that springboarding of an entry of non-banking entities, which are fintechs, big techs, e-tailers, and collaborating with the banks, right, in the country. So you think about UPI, you think about all the other things that are happening. It's a very nice blend of tech and finance, right, as Rahul also mentioned. And what's also happening is that what technology and these partnership has also enabled is that these, whether it's digital payments, whether that's microcredit, is that we're seeing that it's no longer a tier one or a city phenomena. It's gone to every nook and corner of the country. And it is possible due to the evolution that we're seeing. In our case, just because, because of the reach, right, we have now digital payments penetration in every pin code, almost every pin code in the country, right? And that's one part, right? The reach that we are able to cause by working together. The second part of it is also about the convenience value proposition, because for us to succeed, it's extremely important that the value proposition that we offer, whether it's to consumer or to small businesses, it's very clean and it is very simple, right, and transparent to the customers and the small businesses. So I think that's another one that just by marrying tech with and the partnerships we are able to offer it. And yes, so we definitely need banks and bankers, but this preconceived notions and visualization of bank needs to be changed, and we need to have a banking sector on the core values of trust, safety, and facilitating, as I said, the seamless customer experience. And I will say, like, I talked about clean value proposition. I also talk about the next decade is about instant, right? Instant gratification, whether it's instant onboarding, instant payments, instant settlements, anything, because I think the next generation of consumers and small businesses just don't have patience, like let alone days, not even hours. It's got to be like in seconds. And then also this tech and then partnerships also allows us, what's going to be important is the keeping the costs really low. And in that, because if we offer the cost or if we keep the cost low, we can offer much compelling value proposition to the ecosystem. So I think in summary, this transformation you're seeing, it's because of partnership and technology. I think we've already seen validation that we can go to every part of the country and we can build very great customer experience, and we continue to build on it as we go to the next decade.
Thanks, Vikash. So again, single word which after Mr. Puri's keynote address, I used, I think the same thing all of you guys are emphasizing on is the partnership and collaboration. So I don't want to summarize and waste the audiences and yours time. So let's get straight away to a few rounds of interesting discussion after the preliminary discussion. And this question is, I'll start with Ramesh. You being a banker, you please deal with it a few minutes. What we are seeing, if I may use a technical word, is a growing disaggregation. So till recently, we used to talk about trust. That 5-letter word was the bedrock of banking. You pay, you save, you borrow. Everything is with the bank. Bank is a marketplace. You buy. But now we are saying it is disaggregating things. It started with the payment space, then it spilled over to other places, even deposit collection. That NeoX, I think ahead of others it started, and others, Google Pay also started on. So be it lending, be it buying things, be it even keeping money, we are finding the the consumers who are very value conscious and who has impatience, they are going to the best. And probably it's not possible for a bank to be best in everything. And which is why what we are seeing is this, what started in the payment space now getting into spilling over to others and all. And obviously, if you are not a smart bank, you are the loser. So how do you stop that? How do you make the customers glued to you? And do you agree with the thesis of growing disaggregation, spilling over from the financial space to everything? You start, I'll start with Ramesh.
No, that's a very, very, I think, critical point that you raised, Taman. But, fundamentally, look, these are phases. And I again want to say that, trust is not going anywhere. We can keep discussing till cows come home, but, instances will happen and the trust factor will again come back. It's just a matter of fundamentally right now it's more about the optics of digitization, disintermediation, the frictionless experience. I think all of this is great. I think this is pushing the customer in the right direction. But look, at the end of the day, you need money to be to be with people whom you trust, and that's fundamental. That's absolutely core to the banking industry. That's not going anywhere. Now, does that mean that and like you said, banks can do everything? Maybe they can't do everything, but I think there also, if you ask me, I have a slightly little different view. Tamal, it's a phase. I think banks have done tremendous amount of technology, and I think I just want to also reinforce. It's not that the banks have not been led by technology, whether it's the foreign banks in the 90s, the private sector bank in 2000, they've all shown a very, very, I would say agile way of, reacting to the customer needs. Yes, it's a different set of kind of, technology that's being thrown. And that's why I made the point. As you see more and more banks learn how to create the new age tech platform, you will see them competing very, very hard in each of the spaces that we spoke about. And of course, there will be partnership. It's not just about competing. As I said, there will be places where there will be partnership. There will be places where there will be competition. I think the critical part is which of those banks, and I'm speaking more from a banking fraternity because you asked the question from that perspective. I think it would depend on how fast and quickly they transform themselves, and how do they bring some of the new age experiences to their customers quickly. And also, please understand. Finally, there's also something called a relationship. By disintermediating, you can keep kind of breaking down and go to the best experience for individual channels. But at some point of time, the cost of doing that is going to hurt. And that's where I think, again, the consolidation will look at it. So when we look at, as a bank, we look at a customer today. Nobody looks at payments as the only rate. Take a classic example. It's a lot of, discussion about payment, as the, the leader of the pack in that sense. That's not reality, because it's only the hook to bring the liabilities and the assets. And the one who can do that better, and finally where the money will, the customer will place his money, would decide the profitability. So clearly, it's a game that's temporarily being played out. I think in the long run, the way I see it, there will be few, banks that will surely break out. They would compete. At the same time, there will be two or three fintechs who would also kind of, start being in the position to offer it a far better bouquet of services to say, with some partnerships. And then you will see which ones of them are really kind of getting into the zone where they are able to really provide the best of the services. I think I don't think it's a 1-0 answer. And I again want to finally it will boil down to trust. You cannot take trust out of banking. I mean, that's like, then there is no banking, if you ask me.
Thanks.
To my mind.
Thanks, Ramesh. I think what you are saying is this: you are partially agreeing that disaggregation is happening, but you are saying it's a phase, and it's left to the banks how to respond, and many of them will be able to respond. Some of them will not be able to, and the trust is very important. I'll bring in Google Pay here. Shajit, can you tell us, because you are taking money deposits on behalf of banks. So if trust is so important, why would people keep money with you? And I think when I am keeping money with you, and I'm not very sure whether I care for the bank. I see the platform and convenience, and I keep money with you. So do you agree with this, that the growing disaggregation, and this is the big challenge, and the customers, the millennials, are going for very, wherever the best opportunity they are getting in, not waiting, not remaining under the bank fold?
Yeah, Tamal, first, I want to clarify a very fundamental misconception in what you said, and through you, I'm sure others are listening. So, we are not taking any money. We do not accept any deposits. We're not authorized to. We have no intention to get authorized to either. Nobody is depositing a dime with Google Pay, a rupee or a paisa with Google Pay. So I just want to make sure that it's as clear as possible. We are partnering with banks, right? And that is our stated intent. Look, we want to partner with the ecosystem. We are not a bank. So what we are doing is, so we have a platform, and that's the way you should think of, say, certainly Google Pay, right? And generally Google in general has really been able to grow because we think of the services we offer to users as that of being, on a platform on which you can, build a lot of things. I mean, Android's a good example of that. And it's a similar thing with Google Pay, where we have something called the Spot platform. And it's a platform on which, let's say Equitas in this case, or any other bank that, we could tie up with, actually do all of that things. What they get access to is a platform like Google Pay, and then through us, the users of Google Pay. There is no money that they are giving nor parking with Google Pay. But of course, what Google Pay is enabling in this case is enabling discovery in a way, right? So what we are doing is marrying, if you will, the bank with a customer. That's the role, we're trying to play here. And if you just take a step back, Kamal, what's happening, I think what's happening, and I'm looking at this at a fairly strategic level. See, I think the industry is going through an evolution where it's going through this platform evolution. That's the way I look at this, right? Which is that, if you look at it, there's the core stack of the bank. So say the CBS, et cetera, stuff that it's built on. Then on top of that, increasingly there is this middleware that is coming up. There are a lot of companies now that are specializing on APIs of all kinds. When you think of it, whether you think of Setu, Cashpay, et cetera, a lot of these companies are doing this, right? Zeta and all of them. So there's that second layer where they are abstracting away all the maybe the work that might be required for the bank to do in order to sort of plug into different players. Then there are players like us. So that's like the third stack, if you will. And then is the user-facing stack, right? Which you could argue is actually us in a way, right? Like, so not only do the banks face, but it's also us who are user-facing stack. So it's these three things: the core banking, the layer above that, which is sort of all these APIs, et cetera, that are now beginning to come together and abstract away what the bank needs to do. And then the third is the user-facing piece. And in that, if you think of it, look, what's the core? What's the foundation? It's still the bank, right? And then now that ecosystem is developing, et cetera. So let's be very, very clear that until and unless players like us get the license, get the balance sheet, are allowed to do this, we are not accepting, nor will we accept a single rupee, right? And that's certainly not what we're doing. But what we certainly want to do is indeed we want to partner with the likes of HDFC, with other banks, and say, hey, listen, how can we bring more of what it is that you do to more users in the right way and make it super easy, frictionless to all of these users? That's what's driving all of us.
Yeah, sure, Sajid. No, I didn't mean it that you are taking the money. It's like Amazon is selling papad, somebody from Jalandhar is selling buying. Similarly, some bank is collecting deposits through you and makes my life as a depositor easier. What I meant is that I didn't mean that you are collecting money. Definitely not. Regulation does not think and all. But the growing disintermediation or disaggregation. So let's hear Vikas. Tell us in this entire what we are discussing, that growing disintegration, and the banks are on the one hand, some of the banks started positioning themselves as a marketplace, but I don't think that is working at this point of time, particularly after COVID, the big push for digitalization. That bank for now bundling all the apps and they're calling it super app. It's trying to reinvent. But as a customer, I think the kind of push in digitization we have seen since last March, April, I think I am going to where I am getting the best service.
But if I may, sorry.
Yeah, sorry, please carry on.
5 seconds, Vikas. One quick thing, Tamal, I'd like to correct is, again, the word that you use, these are strong words, right? Like you're suggesting there's disintermediation or disaggregation. Actually, the way I look at it is that it's just, I definitely don't think there's aggregation, but I think it's just more points of partnership, right? Which have gotten created in the last few years. And that's the way I look at it. I don't think we can use a nuclear term that, hey, listen, things are getting kind of broken apart and all of that. So I just, submit that.
Fair enough. Hey, yeah, Vikas, over to you.
No, thank you. So let's think it from a consumer standpoint, right? That what consumers want, they want the best experience, instant and digital experience. They want the best rate, right? If they are, giving money, they want the best interest rates, right? Or the highest interest rate. If they are borrowing money, they want the lowest interest rates, right? So it's a value proposition. And then they also want it like in a paperless fashion, right? And then, it's incumbent on all of us as an industry to say, hey, how can I offer the best value proposition to that customer, right? To that consumer that's really easy, that's instant, paperless, and the best, right, in terms of rates. And then if that customer, let's say sitting in Jalandhar and doesn't have access to a bank, right, say small Equitas bank, who's only catering, right, to say South of India, I'm just making it up, then that customer deserve, right, to get that best rate from Equitas Small Finance Bank. And that's the power that we are talking about here, to say like, look, more competition is good, more players are good, because that's when, you really excel and you really transform, right, yourself and then the whole economy. And so that's why I feel like this is a world where, the marketplace where we have so many things now happening is the right model, because what that does is it matches, the customer needs to the best product, right? And in a very, very seamless fashion. So I really think then that's where the partnership, again, I goes back to the same point, becomes very important, because this is not like as a one entity, I want to cater to the all. So it's not a winner takes all market. And it is not that, okay, this is my market, you go to the other market. I think it's about a marketplace where all these, entities come together to serve the customer and let the best product, let the best offering win. That's the mantra that with which we go, that's the whole thesis of even the Amazon marketplace. Hey, let's give the best product if it is made in Jalandhar to somebody in Chennai, because that's what consumers deserve, right? And this is the same philosophy now, mental model we are deploying for even our payments and financial services business. So I really think, it's not about disintermediation, aggregation, disaggregation. It's about how do we surface and offer the best proposition to consumers and small businesses.
Yeah, fair enough, Vikas. So I would keep Rajesh Infrasoft as the last speaker of this round, because again, you are equidistant from everybody, and it doesn't really matter to you who wins and who loses. You make your own money through your business model. So let's hear Rahul and Rahul Gupta first, and then Rahul Chari. Yeah, Rahul Gupta.
So Tamal, I'm going to just spin the wheel a little differently here.
Sure, please.
See, when we look at it, and let me just speak from some very grassroots experience, because that's what Avanti does. So I'm just going to bring this conversation from a very high level down to what happens at really grassroots business, which is a lot of us are into those cohorts of customers. See, when you look at, I actually feel that, if you look at the people who are still out of the formal financial services system in India, that's about 100 million households, about 400, 500 million people. Now let's look at innovation from their lens. Has the innovation, is it sort of benefiting the same group of people in tier 1, tier 2, tier 3 cities, or it's really impacting the lives of people who are really sort of beyond in rural locations. And let's look at the journey of credit, for example, for somebody who's data dark, who's never borrowed from formal credit system. When we look at this, so this whole element, I think, of paperless onboarding is becoming a hygiene factor. We're talking about a little bit of disintermediation when we talk about presence-less, because a lot of players like us believe that scalability will be driven by digital platforms and not necessarily by brick and mortar. And then we talk about, the leg of sort of multiple pools of capital going to people who need it the most. So if I was to share my view, I think there has to be aggregation of capital where banks with their big balance sheets partner with fintechs, take a little bit more risk in terms of partnering with early stage entrants who have built some knowledge, data, analytics, portfolio quality that they can showcase to the big banks to say, you would like to go into these rural markets. You do not have the intent to build brick and mortar there. It's not required. You don't have the feet on the street. And organizations like us have used our own balance sheets and risk capital to prove some concepts. So why don't you partner with us? Because then I think that sort of holy grail of having the most affordable pools of capital going to the people who need it the most gets bridged. So I'd say aggregation of capital between fintechs and even fintechs who are who come under regulated entities such as NBFCs like us, because we're always hungry for capital, and there's nobody questions the demand. And that's kind of my selling spiel to even the bankers here that have that risk appetite to partner with early stage companies like us who have proven something with our own risk capital. The second is, as we talk about aggregation of capital, that's where you also talk about disaggregation of risk, because that's when you're saying if you want to go into segments or serve pools of customers where your risk appetite doesn't allow, maybe that's where we share the risk as well, because we're still learning in this journey. So I would just move away from pure disintermediation to also talking about aggregation of capital and disaggregation of risk, which allows us as an industry to really sort of cover the large swathes of customers who are still, financially excluded from formal services.
Thanks, Rahul. I think what you hinted at, you didn't use the word, I'm using it, the co-lending, which Reserve Bank of India, the co-lending between banks and non-banking finance companies, financial companies, and Reserve Bank of India has already allowed it. And if I'm not mistaken, this is growing, the co-lending concept. So let's hear the other round.
Very slowly.
Yeah, PhonePe. Yes, Rahul. Second Rahul.
Hi, Tamal. So I think picking up from what Mr. Ramesh said towards the end, I totally agree that there is a lot of overstatement in fintech and digital payments today in terms of what they've achieved and therefore what they necessarily will achieve in the future. There is obviously a razor and blade strategy that payment companies are probably looking to do in terms of cross-sell. But I think it would be, I think it's dangerous to call it a phase or necessarily treat it as largely optics. The reason for that is I don't think there is a disintermediation that is happening. I think that's too strong a word, like Sajid said, and even Rahul mentioned that overall there isn't a disintermediation. I think there's definitely an unbundling and bringing a level of personalization to the cross-sell, which banks so far haven't demonstrated as being able to do very successfully. That comes down to the accumulation of data. Banks have the data, but in different conversation, it's come across as not necessarily being in a data lake to be able to actually leverage it cross-functionally very successfully. It comes down to personalization in terms of what does the customer really need. For example, I have never owned a two-wheeler, and I have some of the banks send me messages as well as communication for two-wheeler loans. And it becomes very, very difficult to understand why even that is happening. So there is a spray and pray methodology to customer acquisition for very specific products. And in some conversation, it's also come across that every product needs to be presented to a very large set in terms of conversion and the P&L for each of these lines of businesses that the bank is running. Fintechs have taken the approach of trying to actually dissect the customer base based on data, signals, and requirements, and taking a strong signal for both demand and supply. The demand supply match to a level that is at scale. And secondly, what Rahul Gupta mentioned in terms of reach, trying to make this completely a satellite or completely digital. In that, I think partnering with the banks, unbundling the services to the extent that it's personalized to the user, is a collaboration that is leading to possibly higher acquisition at lower cost and creating additional lines of revenue for the bank also, and possibly primary lines of revenue through cross-sell for the fintechs. And why I think one of the best examples is Bajaj Finance. I mean, we don't slot them as a fintech yet. They are not a bank. They are an NBFC. And the initial products, which were largely around POS-based lending or checkout-based lending, was loss leading, but they have had an excellent cross-sell strategy to be able to build successful books with very, very good returns over the last many years. So I think unbundling of services and the ability to kind of reach those services to the right folks in a pure digital manner is, I think, where the fintech strategy, and fintech again is the combination of the techs and the banks, is the banks that are able to actually do this seamlessly, which goes to the point that Sajid made in terms of having the layer of, I would say, a thick, intelligent middleware on top of the core banking systems and other systems to be able to power these through the technology partners and platforms are the ones I believe will see the maximum success in this.
Thanks, Rahul. Very, very valid observation. Rajesh, over to you. A quick take.
Yeah. So I'm glad Rahul ended the talk with technology, so that helps me carry on from there. I think from a perspective of how banks need to structure themselves, when we talk about concepts like super app or a single app, so if you compare it to the UPI Beam app or banks having just UPI on their platform, or if you look at the simple payment mechanisms that tech companies offer, they are just serving the requirement of swift payments, right? So if you compare that need to a super app, it's like carrying the difference between carrying a knife and a Swiss knife. Do we need all the tools in the super app to run the business and make profits for the bank and help the customer? That's an important point to think about. So I think when we look at banking per se, it will evolve into point solutions rather than super apps, where you are able to have a common open banking infrastructure, a secure way of being able to reach out to your partners and customers, and being able to then provide that high end of customer experience, regardless of which customer point you're touching. The important point is also to leverage on telecom and mobile infrastructure to reach out to customers and build inclusion. So if you look at the programs of how you look at banking being organized, when you look at payments, you look at financial outreach, inclusion using technology. But when you look at the core part of banking, which is actually nation building, core lending, infrastructure lending, and things such as that, I think the things move back towards having risk management, data analysis, and core technology really being brought up to pace to be able to make sure that banking becomes safer for the bank themselves. And that's one of the core changes we are looking at within the banking technology world, where banks are strengthening their infrastructure, they are strengthening their processes, and you will soon see banks being able to cater to a larger role in the nation building exercise when it comes to larger lending activities. And of course, the ability for open banking being adopted will help more innovations in the fintech. So what we've seen, I would think, is just the tip of the iceberg. You can look at the innovations like prepaid vouchers from UPI, take that and see how you can operate that. Look at the ability to bring digital currency in. a central bank digital currency, that is going to take a new pace in terms of how offline transactions work and how you can have subsidy management. You look at the whole aspect of various other innovations that open banking will lend, you will then see a different paradigm of fintechs coming in to probably take banking to the next level. So I do think that technology will play a big role in terms of being able to lead the next swift change of how banks look at taking their own role in terms of both being agile, customer friendly, enhancing customer user experience, and importantly in nation building.
Thanks, Rajesh. We have about 18 minutes left. So let depends on how quickly we wrap up this round, which will start. Given a choice and chance, we'll have a last round quickly. But before that, just one thing I would like to, each of you, maybe a minute or 1.5 minutes each. Can you tell us the perception is this? The bankers know the issues in a sense that how they need to improve their technology bit and all, but the legacy issue is a problem with the banks. So they are all the fintechs. You people have the advantage over banks because you are much quicker. Banks also mentally they always want to build and own their own thing. Whether you are on cloud, they take their time. So that's a disadvantage bank to transfer themselves. And also in related thing, the cyber security, how critical is this? How do you manage it? Mr. Puri mentioned, and I also believe that for mostly fintechs, the cloud service provider itself takes care of the cyber security. If I'm wrong, please correct me. So I will ask Ramesh to be the last speaker here. Quickly, we'll start with anybody. Anybody wants to be? Sajid, you want to start? Anything? Yes, Sajid.
No, I think, look, trust, data security, etc. All of this is the foundation, bedrock of any relationship in any, context. I don't claim to know enough of the sort of specific technology behind cybersecurity and cloud computing and all. I think Ramesh and Rahul and all will be able to, Chari will be able to speak much better on that. But trust is a foundation. So, Tamal, nothing new for me to add there, right? I think I completely can see why it is hard for banks to, have to make that, and I think since Ramesh is here, Sashi has mentioned, right, in his annual letter as well, HDFC, it's a multi-year journey, right? Because you have to keep the plane flying and yet you have to sort of change the engine, if you will. So it's not something that's going to change overnight, and yet you have to maintain systems, you got to maintain that relationship, you have to make sure everything works, and yet you are having to upgrade systems. It's an incredibly complex thing that I think we need to be respectful of. But my point is, I think there's a lot of now players, technology, API providers, etc., who have started to make this, I say in quotes, relatively easier than say it would have been to make the shift 5 or 10 years ago, right? And so it's very much happening.
Okay, let's hear Rajesh again. You'd be in a probably better position. Is it correct to interpret that? Is it advantage or rather disadvantage banks because of the legacy issues? Even if they wish to, it takes time because they want to build, own, and operate kind of stuff. Is that correct assessment?
So I typically like to call it heritage rather than legacy for the reason that, it has been a big role in terms of how we've reached where we are. And that's been the role of banks. So I think there is something to really look up to in what the banks already have, which is what I think fintechs are also able to leverage. The fact that the trust in customers was actually reposed by banks first and not technology is an important factor. Talking about the issues, I do think, yes, I take the point that even Rahul mentioned that there is a deep need for analysis of the data that banks do carry, because that would bring out different perceptions of risk and opportunity and strengths and weaknesses of the banks, and looking at how banks need to then take themselves to the next level in terms of customer service and making themselves viable globally. The important parts that come in terms of this area is, for example, cyber security. I do think it's an important issue to deal with, but most importantly, I think it's also the customer education. We have a very secure payment infrastructure, and if you look at the amount involved in frauds on digital payments in India, it is far lesser than what you have globally, and also far lesser than what credit cards offer. Credit cards have as risk. So when we look at digital payments as a mode, I do think from that metrics, it is a very secure mode of transaction. But when you look at addressing cyber security, there is a need to involve the customer in that and educate the customer as well. Especially when you look at providing offline ways of payments, like for example, using a token like QR codes and things like that. Customers need to be educated on how the process flow is for that, because they are not the trained bank employees. They are themselves now conducting banking literally, right, for themselves. So that's an important part. I think within the banking space, there is a need for the whole part of the core infrastructure being built at a scalable level, whether it's the core engines or whether it is the ability to bring up APIs to service multiple businesses. And again, here, security will play an important role. So I do see that, security will have an important role, but most importantly, I think what the banks have got right at the moment is the regulatory compliance. If you look at the part and talk to regulators, they would feel more secure dealing with banks from a perspective of the whole KYC, etc., being done in more detailed manners. And then those are the regulations that follow on to the next level. Like I mentioned, that each level of automation that follows is then followed with a level of regulatory compliance that needs to be taken up. So I do think that the legacy that banks carry is in fact heritage and advantageous, and technology will help it take to the next level.
Okay, Rahul Gupta, quick take.
Yeah, so I'll just give you my experience, having come from, having worked in the world's largest NBFC earlier, which was very technologically forward, which was GE Capital, and moving into a startup where we decided to build our own platform. And I think that what's given us the agility really is, one is the design is one of a platform, not like a proprietary system. And when you're designing a platform for scale, I think while yes, it takes time to design it, to understand it. It takes big upfront investment, which could be disproportionate to scale. And those are some of the tough calls that you have to take. But just in terms of the agility of what the platform can do, the hyper-local nuances it can imbibe, which is very important for a country like India. And, the ability of the platform to collaborate with multiple players in the ecosystem, that's where I think in building out a new age digital platform, one is probably a little more advantageous versus, having something which is designed in a proprietary manner and which may need some, pivots or, technology to build upon, or the tough decisions on, doing away with heritage or legacy systems and embark upon something totally different.
Yeah, Vikas, Amazon, could you tell us, how do you ensure the cyber security? And do you feel that you have advantage over the established players because you don't have any legacy or stroke heritage? You are much quicker and smarter.
Yeah, no, so to answer your second question first, right, that the banks, we've seen tremendous amount of technology adoption with the banks, right? And that journey is continuing. And what's ahead of us, I think, where these, again, I go back to the point of partnerships is, look, one person or one entity do not necessarily have to build everything themselves, right? That there are certain things that, for example, we as Amazon Pay bring, there are certain things that banks bring. How do you actually integrate the two together in a very seamless fashion, right? That can really transform the customer experience. So I wouldn't say and then there are certain things that, the bank stacks are really good at, right? And then there are certain things in, where players like us or a lot of others are good at, right? So then you marry the two together. I think that to me is the way to do it, because otherwise, if we all end up building all the things ourselves, it'll be inefficient and it'll be long. And it will be, and what will suffer is the penetration, right, and the adoption. because it'll take us longer to do it, right? And then to your point on cybersecurity, I would say this is like we're dealing with people's money, and this to me is an hygiene. Like we are in a business of dealing with people's money, and it's got to be extremely safe, extremely secure, and extremely trustworthy, because without that we don't have a business. So to me, it's table stakes, and the more we can do in this as a collaboration, I think the better it is for this. Because if this thing doesn't really come up the curve, then we won't be able to get that reach that we all want to, right? And it will still remain like the top 10 crore phenomena. So we don't, so I think I don't have a great ideas at this point to say, hey, how can we strengthen it? But I would say like this is extremely important and hygiene to be in this business.
Thanks, Vikas. Yeah, I mean, Rahul, PhonePe. Yes.
So Tamal, two parts very quickly in interest of time. I think there are two kinds of companies, right? There are companies that the product is technology, and there are companies where the product and the business is not technology, right? And then the latter are the ones that are undergoing a digital transformation. So for banking, managing money is the primary business, and that's why the trust is there with the banks. Like that's why all of us have a bank account and finally trust the bank with the money. And technology is a means to an end. From that perspective, our banks in India have done tremendously well. I mean, internet banking has been there forever. Mobile banking has taken off. NPCI is in fact owned by the banks, or primary shareholders are the bank, and have done a tremendous job. So I think just like any other industry where the primary business and product is not technology, they are undergoing a digital transformation, because the investment there in technology comes really in spurts. Banking is undergoing the same thing. So to try and flaw them on that is very, very negative. And I think it is a multi-year journey, and I do see all the banks making those investments. For us, technology is what we do, and we've chosen to kind of play in the fintech space and collaborate with the banks to take services. And for technology companies, the transformation is continuous, because technology is what you live and breathe, you continue to actually keep adopting what is new. So from there, if you go to cybersecurity, I think the focus on cybersecurity by banks, by fintechs is equal. And like everybody has said, there is no two ways about it. It is the most important thing, because you're dealing with either money itself or information about money. I think the only slight difference might be because of the fact that fintechs don't have legacy systems, are not necessarily with proprietary enterprise technologies. There might be an advantage in terms of faster reaction times, as well as in terms of the ability to try out newer technologies, which can go more risk-based than rule-based, which can go significantly in terms of anti-pattern detections that are real-time with data. I think the ability to experiment with newer technologies that can continuously push the envelope is probably higher with the fintechs because of the new age stacks and the agility.
Thanks, Rahul. Let's hear Ramesh from HDFC. Last word is yours. Ramesh?
No, I think this question is probably centered around what I do every minute and every second in that sense, right? So I think look, in fact, if I just look at a little bit of a hindsight and say, when I kind of took over this role, one of the most interesting aspects was around the heritage, the legacy part, and we've spoken a lot about it. I think there are two things that happened, and just to look at hindsight. I think one, the banks missed a beat on core banking. It's a very fundamental part that they missed out, right? And why am I saying that? I think they basically bought core bankings of 90s and they kept moving on top of it. And it was fine to do digitization on the front end, API, all of that stuff. Finally, fundamentally, the debit is going to happen, or the credit is going to happen on the ledger, actually. So I think if you look at the whole history, I think, and that's where the banks have been reacting today. So I think fundamentally, I think the challenge for the banks have been to see where the core backend, and I'm not just core banking, I'm talking about core backends actually. How do they shift to the new set of technology? Because the explosion, and it's very, very, very kind of well coordinated, because the UPI explosion post demon and then thereof simply kind of pushed the banks to say the classical Java-based, typical fundamental architecture is not going to kind of scale up, right? I mean, that's a miss. I think I wouldn't say miss. I think it was probably a delayed reaction. And to react to that is difficult because you're already on a running plane, like people said. And that's why fundamentally, if you look at it, I think the strategy for the banks that will break out of this is to see how do they parallelly create the stack. They have to unlearn. They have to unlearn what they have done for very long, because incremental changes on the existing core systems is not going to help. But they have to run the bank on the existing heritage system. So it's a very tough balancing act. And that's why I said a lot of the banks need that vision, the risk appetite, and the ability to think forward and say, look, I am adopting cloud, I am going to do microservices, I am going to do AI ML, I'm going to do data lakes, but at the same time, I'm also going to run my heritage. So it's a kind of it's a tough one, but I don't see any other way out, because the minute you serialize, you're going to take a very long time to be able to kind of, even if you want to go in a serial mode, right? So that was one fundamental, I think, catch up that banks are doing. Some of them are doing very well. In fact, you would start hearing that already started unraveling. Some of them have adopted very nicely into hybrid clouds, with multiple fintech partners coming in, providing a new bank strategy, and that's kind of clearly playing out. The second part is also the kind of technology, and I kind of alluded to that in the earlier section also, the skills that the bank need. I think fundamentally, the most of the tech world in the bank was largely around project management of packaged vendor solutions. It was okay. When you were kind of simply kind of putting the GL and digitizing the GL and building the core bank, that's easy. But suddenly, the whole user experience, the entire API framework, the entire containerization world, it's very different. And design and architecture are very fundamental. So I also think that's why I mentioned that point. The banks need a very they have to quickly ramp up and acquire those skills to be able to build that new bank that we're talking. I'm still not saying banks need to do their own IP. While I do advocate that in certain areas, I do see, like for example, in some of the spaces like mobile and internet, I do think banks have to own the IP if they have to stay relevant and closer to the customer. But the architecture and design principles were fundamentally something that driven. So the kind of skills that the technology skills that the banks have to build in has to be different. So I think, and that's a tough fact, because in the market today, these are premium things, right? Just doing things in parallel, and the kind of money, the kind of time, all of that is not with you. And then on top of it, you would also get the skill. But I do see, that's why I said some of the banks are very focused in this area. So clearly, I do see this as a solution. And the last quick bit on the cyber security, I don't think that is an issue. I think, in fact, I've spent a lot of time over last 1 year with the regulatory framework, with all of the other ecosystem players. I think the security platform has caught up very well with the cloud today. And fundamentally, if you ask me, there's areas where I think smaller banks are better off on cloud, because there's a better skill and better technology that's available in that sense. I think it's that simple in that sense. So
thanks, Ramesh.
I don't think that's so.
Thanks, Ramesh. I'm sorry. I'm cutting you short for the time's sake.
Sure.
I wish we had a public sector banker here, so we could have heard them also, because after all, they are about 70% of the banking industry, or close to 70%. So I just want one question and maybe one line answer, not from all of you. I want, this question is from Amazon, PhonePe, and Google Pay. Three of you, just one line answer. Tell me, globally, I mean, much before, nothing to do with COVID, we have seen the neobank, challenger bank, digital banks in US, AA Bank in US, in UK, we have seen the Revolut Bank and Monzo Bank, N26 German Bank and all. They're all primarily like Google Pay and PhonePe and Amazon Pay, that kind of banks and all. So do you have that ambition in India? And if you do, how do you plan to go about it? And what would be your message to suppose Reserve Bank of India is listening to you? I mean, what would you tell them? Just one line, to the regulator, to the customer. That's all. People will be very curious to know. Yeah, we'll start with whoever it is. Don't feel shy. Because with the last one, Rahul first. Yeah.
So Tamal, just very quickly, I think none of us are neobanks here. PhonePe definitely isn't a neobank. We are primarily a payments platform. But I think unlike out west, where there's New Bank or others, where the disruption came from the fact that cost of banking for the consumer was significantly higher in terms of fees, and therefore neobanking had an opportunity to disrupt that. I don't think the value proposition with neobanking in India is really that clear right now, and therefore we are not sure whether there is a big enough opportunity on the neobanking side.
Okay. Yeah, Sajid, Vikas, sorry.
Sure.
Vikas.
Yeah. No, I would say, look, overall, if I have to say, I mentioned it earlier, right, that more competition, more players is actually good for the economy, good for the consumers and small businesses. So to that extent, I would ask, like, as a regulator, or to just continue to open up the regulation so more and more players can enter. And I'm not saying we, but I'm saying more because it's good overall, I think, in my view. And from our perspective, we look at our business really where we can add some value and where we can really grow the overall pie in the industry. So I don't have any plans, but I'm saying we just look at the businesses and say, look, anywhere we can add value, we should absolutely add. So that's just a very one-line answer to say, look, we should just continue to open it up because I think the more competition is good.
Thanks, Vikas. Sajid, you have the last.
Thank you. Thank you, Tamal. Once again, great discussion. No, we are committed to and will always partner with the ecosystem and with our partners. That's the one.
Okay, literally 101. Thank you.
Sorry, Tamal, I just wanted to make one point here on, because it's something that's very, see this neobank model, I just wanted to kind of come in here, and I was studying this.
Yeah.
Today globally, there are only 3 banks or neobanks that make money. Okay. There are only 3 banks over the last 8 years, and some of them you have named. Actually, I'm not kind of saying that it's not going to change. It's going to change probably. It's not easy for them as well. So I'm just kind of wanted to kind of leave that saying. Finally, it's about partnership, collaborations, and few people doing it far better. And then it's not about banks and others.
Fair enough.
I think it's generally put us, this value.
So this is one subject. Actually, we could have had half an hour more animated discussion, but we have to end it. All good things end. There are many questions. We'll take a few questions. But before that, to summarize, I think there is it's a unanimity among all of you that banks will remain relevant, bankers too, and technology also. And why only pick up banking and bankers like any other places? I think probably if you leave the actors and musicians and painters out, every other profession is being threatened by technology. So they need to reorient. They need to reinvent themselves to remain relevant. And other part, all of you said that the need of the hour or the message or the flavor of the season is collaboration, just partnership and collaboration. Because at the end of the day, what we do, meaning the financial system, be it fintech or pure play banks or tech fins do, is to meet the customer's demand. So it's the customers, what they want, the best thing they want. And if you want to really cater to them, you need to collaborate among each other. You need to handhold each other and take it forward. So, and to use a cliche, even if the scenario is evolving and tough is changing, customer still remains the king. So whatever is happening for the customers, right? So with this note, we bring an end to this discussion. There are many questions. My colleague in Business Standard, Sachin Mampat, are collating, but they'll take a few. The first question, and make it very brief so that we can take as many questions as possible. Rahul Gupta, I will ask you to take this because as an observer, if you can see, you are not a participant there, that are Universal Bank and SFBs and erstwhile microfinance entities slowly shifting for mass banking to class banking? Because you are into the bottom of the pyramid segment. Are you seeing that? The gentleman who is asking the question is Gautam Roy Chaudhary.
No, I don't think so. I don't think so. I think every organization clearly has a target segment. Now, there are organizations which are in universal banking, or as part of their roadmap, they want to be in universal banking. There are organizations like us, we are solely focused on financial inclusion at the base of the pyramid. And then there are some which will be in the middle. So is everybody moving from mass banking to class banking or vice versa? I think the answer is a vehement no.
Okay. A question from Aninda Ghosh. The question is from the you guys, meaning Google Pay and Amazon and others and all. Do you think these fintech companies are very vulnerable, and can it happen like what had happened in the early this century .com bubble? That's what the question. It's a long question, but that's what they said. That's the question. Aninda Ghosh. Who wants to take it? Among you three, Amazon, Google, and PhonePe. Yes, Ajit.
Oh, I mean, no, that's not the view I share. I think we can see there's that the space has reached escape velocity. Now it's about figuring out how we can bring more services in partnership with other financial institutions to more users. It's really about that, and those who can do that really well, I think will do well.
Okay, Vikas, Rahul, anything you want to add?
No, nothing.
No, nothing. I think I totally agree with what Sandeep said.
Okay. This is the question, is this maybe probably Ramesh of HDFC Bank can take. Is the focus on tech taking sufficient, are you taking sufficient cognizance of digital literacy and availability of technology lower down the pyramid? Because HDFC Bank is one who are also going, to the lower end, the hinterland and those kind of customers. So how is the digital literacy in that segment?
And that's a great question, because a lot of that we spoke about today was the millennial, the payment, the digital experiences. But the fact is that there is a Bharat that's waiting to kind of do banking, right? I mean, and fundamentally, if you ask me, this is where I think the future battle would be fought. If you ask me, for banks and the fintechs as well. It would mean a lot of focus on building applications that suit the local flavor. It would mean a lot of regionalization, a lot of flavor that's closer to the hinterland. And I think a lot of work is happening in this area. Idea of doing banking, kind of creating alternate data points for lending, looking at geospatial data, looking at warehouse financings, looking at agri-financing in a very different way, look at digital distribution in a very different way of, how do you bring the classical BC models onto the table in a different way. So I think it's a very, very vibrant ecosystem that's playing out. In fact, I would say, for example, we are very clear that our next focus, if you ask me, should be 70% onto that area and 30% onto the classical area, because we believe if you have to go really deeper, the technology there has to shift significantly. And that's where some of the gains would happen, the rapid gains. And that's where the need is also there. Like some of them spoke about, better credit, faster credit, and all of that stuff. So I think a very, very pertinent question. And you will see banks adopting to very localized, and that localized, when the technology itself will evolve as to how we are servicing them, from a front-end experience perspective.
Okay. There's a question from a person called M. Vasanta Krishna. I don't know any of you will be interested or has the answer. Do the payment platforms need to be better regulated by the RBI? I really couldn't get the question. Essentially, probably the person is hinting at that they are not adequately regulated, sub-touch regulated. Do you need stricter regulation? Anybody wants to answer anything? No? I don't think anybody would like to. Yeah, please.
No, I'm not so sure. Question is around payment, because frankly, I think the question had been around lending and liability side. It would have been okay, because frankly, payment finally would hit the banks. And today, the regulation is largely around anti-money laundering and some of those, the transaction monitoring and fraud monitoring and those kind of areas. And I think it's fairly well evolved space. I just wanted to leave it with that. If anybody wants to come in, but that's probably where this goes.
No, I would just say, sorry, just one.
Yeah, Vikas wants to add something, and then Rahul also, I saw you wanted to add probably. Yeah. Rahul Chari. Vikas, please.
I would say like payment players are already very regulated, right? And it is critical, like, to make sure we continue to provide the best experience. I'll give you an example, right? We have a license on PPI from RBI. We are regulated by NPCI for our UPI business and so forth, right? And for our insurance business by RDI. So I think it's not, and then now there's a payment aggregator licensing, right? That's also coming up. So if I have to say, like, are payments players regulated? Of course they're regulated. I've given 4 examples where that is the case. And And if it is if people think it is not, it's a misnomer. And it is, I think the regulation has to be commensurate with the risk, to the ecosystem and something that we should continue to evolve.
Thanks. Rahul, I thought PhonePe, you wanted to say something, add something. Rahul?
No, it's basically the same. We are also regulated as a PPI issuer by RBI. We are regulated as a TPAP and audited by NPCI and our partner banks. So definitely there is regulation. The regulation, I believe, is already strong, and the regulator and the ecosystem continues to actually evolve that based on the size and the impact payment platforms are continuing to have.
Okay, we have 3 more minutes or 2 more minutes, 2 questions. It's Hek Ayud. His question is probably Ramesh, you can answer. Banks partner with fintech companies to provide customer-facing technology. How do banks ensure continuity for such crucial platforms if the partnerships aim for any reason?
Yeah, that's another valid question. I think that's where the architectural design aspects would come in. If the open API structure is very, very important. So when you bring in partners and you connect them seamlessly, and you connect them in a way that they're loosely coupled. So tomorrow, if that particular partner, fintech partner, for some reason is not able to cope up, not survive, or he decides to move away from the bank, decides to move away from the partnership, you can quickly bring in using the same set of APIs through third party, another third party integration. So I think it's all about how do you design your API architecture very, very cleanly around this. That's the quickest answer.
There's a last question, but before that, there's one observation from a gentleman called Yaram Raju. It says, we need banks or bankers. Entire panel is bright and made extremely valid points. Last question is from Chetan. Actually, there is not the last question. There are many more questions, but I'm just taking only one more. Chetan Sharma said, would the panelists would be interested in reacting to the Reserve Bank of India new norm for that payment? He's talking about, it's a very long question. Essentially the EMI that the standing instruction bit. Is it inconveniencing many of you? That's what the question. Which they've got a lot of criticism from various circles. The system is not prepared for it. So anybody wants to answer anything? If the players you would not like to talk about regulator, maybe Ramesh or Rajesh, you want to say? Rajesh, you don't do any business with RBI, so you can be frank. Okay? No?
No, I think I have very little to say from the business part, but I think from a perspective of how these EMI business has been come out, or even now the buy now pay later, these are all new business models that have come in, and I think there has been sufficient work. If you look at any of the products, they are actually complete products and nothing missing in terms of how that can be executed both at the front end as well as at the back end. It's all tried and tested. But I think if there is any element of friction, it is in terms of the
Yeah, I think the question was also more from a regulatory aspect. I think
who is answering? Vikash, right? Who is answering this? Yeah, Vikash, please go ahead.
Ramesh.
No, I'm answering.
Achha, Ramesh. Okay, fine. Yeah, please.
Yeah.
Ramesh, please go ahead.
Yeah, no, I think you asked me. So I think from a I think if you look at it, what regulator is doing, I think it's perfectly in line, because frankly, at the end of the day, the way the EMI structures, the BNPL and some of these lending products would come across, I think what is important is who is kind of manufacturing the product, and is it in a fair way that's being put across to the customer. So it would, and worldwide, I mean, this is not just here, worldwide, I think the regulations here will come in. It's the same playing field. And I'm not for a minute saying that it's kind of taking things back. I think, in fact, I spent a lot of time, in fact, last week with the regulator on these aspects. And I think they're seeing the picture. It's just that they're also ring fencing where it needs to be ring fenced, and then opening up where it'll open up. So I think it'll play out. And it's been fair. I think it's because ultimately people have to understand what they're signing up for, and in a fair way. Right? So I think that's where this whole discussion is coming from.
Yeah. Anybody else want to add? Sajid, Vikash, any things to add? No? Okay. So fair enough. So that brings us to the end of yet another day, the 5th day in Business Standards 9-day 11 event summit. Thank you, Vikas of Amazon, Rahul of PhonePe, Rahul Gupta of Avanti Finance, Ramesh, HDFC Bank, Rajesh of Infrasoft, and last but not the least, Sajid of Google Pay. Thank you for being with us, and thank you for being so candid and joining us with a lot of clarity and a lot of things to offer. Over to you, back office.
Thank you, Dhamal, and thanks to Mr. Puri and all the panelists for this insightful discussion. Thanks, Intrasoft Technologies and Jana Small Finance Bank, our partners. We are now getting into the Diwali week and we will take a break, but not before our next session on bank privatization next Tuesday, 2nd November at the same time, 4:30 p.m. Details on your screen. And the week after, we have back-to-back sessions lined up on insurance, mutual funds, and big banks. Goodbye for now. Have a great weekend. See you on Tuesday.
Thank you. Thank you all. Thank you.